Everybody, welcome. I am Oriana Shea with the Oriana Shea Group, and I am here today with one of our esteemed lenders, Irvin Lopez with CrossCountry Mortgage. And we're going to dive right in and just start talking about the market, the rates, and what is the risk of waiting for the rates to drop before you purchase a home, should you or shouldn't you? Let's start with the rates. Let's just get that out of the way, the elephant in the room that seems to be growing instead of getting smaller. So tell us what's happening there and what are you guys seeing and what are you anticipating?
Well, right now with market rates today, we're looking at, depending on where your credit score is at and down payment, you're looking at between 7 to 7.5%. The reason we did not have the Fed rate cut back in March, that we were crossing our fingers and anticipating that aspect, didn't happen.
It was supposed to be May, and now it's not looking very good for May either.
Not looking good for May, not looking good for June or July. So the big thing that's not allowing for the Fed to actually be inspired to cut rates is inflation isn't going down, and it doesn't, even with the news today, it's not creeping down any lower. And really the big indicator for them to cut the rates is that we need to see an unemployment rate go up. So last month it went down from 3.9 to 3.8. In order for them to significantly drop, like a point or 2 points, we need to get that unemployment rate up to 5%.
So we're too fat and happy.
Correct. Or some of the information they're doing is dated because they're counting part-time work. You know, the average homeowner or consumer is doing 2 jobs right now to make bills pay and just making it happen that way. So I think some of the economic antiquated system from 40 years ago need to be refined.
Agreed. And I just feel bad for the buyers. I mean, at every level. I mean, you know,
100%.
It's no joke, and we recognize that it's tough. And I do want to applaud some of our great lenders because, you know, they are really trying to get creative to help our buyers get into the market and recognize that this situation is going to change. It's not going to stay like this, right?
Correct. This is a season.
This is a season.
It's like there's ebbs and flows. So this is a season we got to get through.
Good.
Just to get inflation down and get the unemployment rate up to give the Fed some confidence.
Just almost sounds counterintuitive, but I get it.
Yeah.
I get it. I think the other concern from the Fed standpoint is if they were to make a significant drop like they had talked about, that it's going to really just launch home prices in an upward spiral. Like it's just going to make affordability even harder in terms of buying.
Correct. And I guess the trigger rate right now is to see rates come down to at least 6%. If you see rates come down 6%, property values will immediately shoot up to 10%.
Well, we saw that happen. So with all of that said, what we're hearing, and I'm sure you are as well, buyers are thinking they should wait. Well, Piper has an opinion on this too, clearly. So she wants to know. Buyers are thinking they should wait for the rates to drop. So how do you counsel your buyers that are thinking they should wait before they jump into the market for the rates to drop?
So we usually do a cost of waiting analysis if they're on the fence, right? And the affordability, what makes sense to them. So let's run through the average home price right now in Long Beach is $972,000. If, you know, what everybody's waiting for, if rates drop, you know, 1% down to 6%, let's call it, your payment is going to drop only $15, but then that cost of that value is going to go up to $1.05 million. And if they wait even a year and a half for it to go slightly lower, the payment is going to go up $194 because that same house at $972 is now going to be worth 1.1.
So at 1.1 with a lower rate, they're still paying more.
They're still going to have about a payment of $194 higher. And then I'm taking a conservative appreciation of 8% that we're seeing in the city of Long Beach specifically.
Okay. So, and I really want you guys to pay attention to this because I know it's scary. I know it's daunting to get into the market with rates hovering around 7%. And don't take it from me, but talk to the financial experts. The cost of waiting is not going to save you money in your payments. The cost of waiting is going to cost you more money, even if when the rates come down.
Yeah, and if you cost of waiting, you're missing out on that 8 to 10% appreciation. The home is permanent. The rate will be temporary. It's
Right.
not permanent. So you can always refinance down the road to get that lower rate. And even at that price point on average, you'd lower that payment down $700. So from a cash flow fixed cost standpoint, what your mortgage would be, it's really to not at your benefit if you can afford the current payments in the current market.
What challenges are you seeing other than the rates themselves? What challenges do you want to share that the buyers out there might be interested in?
Uh, no, that's actually a really great question. I think the biggest challenge is, it's not about buying your dream home. I think people get fixated on, right? And it's like, hey, it's about if you want to get into the game or start buying or start getting that appreciation, getting that amortization down, it's about building that equity.
Yeah.
And it's like, hey, can I live there in for the next 2, 3, 4, 5 years? And if you have a growing family, the average family that is growing tends to sell or buy a new home every 5 to 7 years, depending on their needs, sometimes sooner. So I think getting that, looking at it from an abundance mindset or looking at from, hey, where is my plan going to be for the next 5 years? And am I in a school area, neighborhood, state that is comfortable for us, commute, if that's easier in that regard? I think consumers get too much fixated on rate and where the opportunity to homeownership is with the appreciation and the amortization and be like, okay, cool. Like it's going to be tight for the next couple of years if I take this current payment.
Sorry.
No, that's it.
She's got to be in. She's
She got to be in the
interested.
frame.
She's got
Yeah.
to be in.
So,
Yeah.
yeah, if the family can afford the payment, even if they got to tighten up the belt for the next couple of years, if they have say, okay, I believe this based on what economists are saying and what information they're consuming. If they're like, hey, I can do this. Hey, realistically, I can drop the payment $700 to $800. Yeah, that makes a little bit more sense and feasible for them.
This falls right into a blog we did recently that there should be a video coming out on tips for home buyers entering the market, especially first-time home buyers. What we often try to explain to our buyers is, don't look at this as your forever place. Most likely, this is your first purchase. It's most definitely not going to be your last. And with that said, we try to coach them to really shift their thinking a little bit and look at this from a strategic standpoint. Like you said, not just can I live there, but if I shift my thinking on what is the most that I can afford in the best possible location, what does that look like? And a lot of times, our buyers come in and they've got this, they're stuck on, I gotta have a house, I gotta have a house, I gotta have a yard. As soon as we can get them to open up their thinking a little bit, hey, let's just look at some condos and townhomes. Let's look at maybe multi-generational homes, duplexes and triplexes, where maybe either you can buy with a family member or someone else, or buy it and have the income offset your mortgage and help you afford a little bit more in what you're trying to do, just to kind of shift their thinking a little bit. Again, with the idea that what you're buying now is you're going to leverage it in a couple of years. You're going to take the equity that you're basically growing in your sleep in your property, that's going to be way more than you could ever save on your own, which is why we really recommend get into the market. This doesn't have to be the dream home right now today. Use this as the stepping stone. Use this as the property you're going to leverage to get into what you really want to be in down the road.
No, I Wholeheartedly agree. I think also the challenge with even not even first time buyers, second time buyers is the financial literacy of it.
Yeah.
And I think that's the bigger challenge. If you have somebody that is looking to expand, it's like, well, we're just going to wait for the rates to drop. Well, the appreciation is going to grow on that end of it. And I'm also seeing buyers or even current homeowners right now, they're trying to get up their step up that, they've outgrown
Yeah.
the house. They don't even get pre-qualified up front. They're like they go see the house and then they stand in the
They're
line of
scrambling.
100 people
I
and they
know.
get emotional and they get FOMO and then they think about that the payments, from 6 months ago or 3 months ago, and they're like, oh, well, I can't afford that. So, work with your lender, whoever that is, check in with them monthly to
Yeah.
see what their affordability is. If it went up, if it went down 50K, it went up 50K, just so they know what their affordability is. And the other challenges too is like, be prepared for homeowners insurance is to go up a little bit higher too, because that has been a hot topic too, to scare a couple buyers that are still on the fence because of that.
Yeah, we've actually, in a couple of condo situations, almost the insurance component almost blew up the deal.
Yeah.
I mean, yeah, insurance is becoming another contingencies for buyers. All of this also goes back to a couple things. One, you really want to start talking to a lender early on, even if it's just, you know, a glimmer in your brain about possibly moving 6 to 12 months from now. It doesn't hurt, and they're willing to talk to you. It's better to know what your options are up front because it'll help you really formulate a more cohesive plan if ultimately moving does make the best sense for you. And the other is really, you know, aligning yourself with a skilled agent, whether it's on the buy side or the listing side. It matters now more than ever on both sides. Would you agree?
100%. I think the fear is too on taking that first step is,
Yeah.
hey, I don't want to get my credit pulled. So
I don't
90,
want to get my credit pulled. I don't want to waste your time. I'm not sure yet. Well, this is how you become sure. You got to start doing the research and talking to the right people.
no, 100%. And 95% of lenders out there, whoever you want to use or whatnot, they do a soft pull. So if a soft pull gives you a
There you
quick
go.
idea of what your credit score is, right? Because you got mortgage credit scores is different than car credit or what comes up on Credit Karma. On
Right.
those sites, it's a different formula credit score. Fair Isaac 7, I think it's called. Um, with that said, it's like at least you get a picture. It's not a hard inquiry. It's not going to drop your credit score, but at least it's free information that you can get from the lender.
Good to know. Keep that in mind, guys. Anything else you want to impart or share?
I think even in this higher rate environment that we're in, however you want to frame it, I think it's a great opportunity to buy if you can afford the payment because the consumer will get scared, right? You got less competition.
Right now, yeah, you have less competition, but there's still competition. So just imagine if you're waiting and everybody else is waiting, and then the rates bump down even a 0.5%, what that's going to look like and what that's going to do to the home prices, right?
Yes, and for every 0.5% nationally, there's that drops, 2.5 million buyers come back into the market. So it's good for you on the list side for competition to show how many offers you got or go through, but
Yes and no. Yes and no. That's another video.
yeah,
Anyway, Irvin, thank you so much for sharing today
my
and for
pleasure.
being here. And as always, thanks for watching. Please comment, share, ask your questions down below. We'd love to hear from you, and we look forward to seeing you next time. Bye for now.